Okay, so some guy asked me about these templates. He's assuming there's templates for this trading, script trading, but the thing about script trading is that you could just be having a close all profits, and that's script trading. In other words, say you built a position manually and you're buying into some plunge and you're looking for it to bounce, and so as you load into this thing, every hour you're pulling the trigger at the market, you kind of want to dump maybe when the whole thing goes profitable, because you know that these markets are constantly vibrating up and down. There is no particular rhyme or reason other than the market has to reshuffle the deck before the next, like there has to be this frantic volatility spike to clear off any of the remaining. It's just like a storm. So a storm hits the market and the aftermath, and then the market picks up its pieces, and I guess you're going to see what grows, right? In other words, after the storm, what holds up as far as the after the punishment. So who's left behind? So the thing with the script trading is that there is not really a template for the scripts unless you consider taking all these scripts here, close all opens, whenever you have under here. I've actually made this so that this is buy limits on a control key 1 and buy limits control key 2. So I set these hotkeys so that I can access off my keyboard. I can kind of get my brain around the keyboard's version of what that key is going to be. So all the cells are, A1 will be sell at the market, and B1 is buy at the market. But I already know that my pinky is going to be on the buy at the market key. Now, how wide that stop is and how fat that order is dependent on how much you could psychologically handle getting punished in a market that you know is more than capable of spiking up or down. It's a non-directional, it's a non-trend reaction. So it's not like you're just trying to range trade it. Like most of the stuff is really noise. So how do you make money from noise is the question. That's really kind of like you can make money from, hey, it's going in up direction and it pulled back, so you have a perfect setup as far as everything calming down in the delta. When people, options traders, talk about delta and beta and theta, all they're really is a bell curve of, the standard deviation distribution nonsense. But how do you trade it, right? You have to have some kind of way to launch a lot of orders to cover a range instead of single bullet. Like they outlawed machine guns in the United States, and I think you can't get a full auto machine gun, but you can do that in the market. You could riddle the market with hundreds of orders instantaneously. The news comes out, so who didn't see this today? Like, this is the constant gravy train that shows up on the news, and you shouldn't be afraid of the news, because if you are, then you're just trading too big, right? Because what's the difference between making 200 pips in 5 minutes and 200 pips in 20 hours? I think 200 pips in 20 hours sounds more realistic and sounds more conservative, but we've all seen the market spike 40 pips in each direction during the news, each directions. So why not take advantage of that trade? Why not place orders that capture that drama? So limits and stuff like that. So actually these are limits, these are limits, these are limits. Now it stops. I decided after my index finger, after 4 buttons, I would go into stop mode. Or I'd have, so if you had, but there has to be some kind of, now you can always change that later on. The only problem is that you got to remember what these are. You have a notepad, what these actually mean under the hood. Like if you have a car that has a 9-speed transmission, you can't start off in 9th gear. So you have to have some type of, you're driving the bus, the market's going spastic. What do you do about it? Do you have these orders on deck to launch and throw at the market? So if you have those ready to go, it's basically like a circus of just volatility. Now this all limit orders. These first three are limits, but these could be stops or limits. Now, if you're a pure limit trader with that one broker, so the nice thing about this is once you've programmed the Hotkey keyboard, just a commercial point-of-sale keyboard, Cherry keyboard, Germany, you take that keyboard, GA86, any variations of it's called a SPOS, which means small point-of-sale keyboard. So it's actually when you go into a small commercial establishment, they've got this point of sale. Well, once that keyboard's programmed, then you can relax, because now instead of you feeding horses and getting the buggy ready, and that's how people are trading. I mean, people are single ticket manually trading and risking a ton of money for no apparent reason when it's already their free technology. I mean, the keyboard costs about $50 used, 100 new. So now you're a high frequency trader. Well, I wouldn't say high frequency, but how about instant execution trader, which would be high frequency if you just did it 2 buttons in a row. I guess you qualify as a high frequency trader all of a sudden. But if you know what you're going to do before you do it anyways, if you know what you did that made money and you're like, I want to replicate that trade on one hotkey on one script. Now, the script is a one-time execution of, say, what people think about a robot, an EA that just churns along. All of these scripts, if they don't cycle through to the end, should that one script crash, it'll actually loop on just that script. So that's bad enough as it is. If you had an EA that started to get confused and or just did dumb shit because you wrote it wrong, it's like when you tell somebody, hey, drive my car, and they're like, one time my girlfriend came back from a long trip with the parking brake on, and she said, I noticed the car was kind of dragging. And I thought, hey, really? It just occurred to you, huh? I couldn't even touch the wheels when she came home. They're so hot in the rear. So she drove the parking brake all the way home. So anything's possible to be screwed up. You always have to look out for the automation thinking, because obviously parking brakes are great when you're using them the way they're supposed to be used, but always the misuse of gear can be a problem in any field, anywhere on the planet. So the idea that trading would be any different, that's why people lose at trading, just on execution alone. So if you can just get the execution down, like, I'm committed to buy at the market with a 10 pip stop to make 15 pips, and you've got, you could write that on the key, or you could have little pictures, on each key. And, so it's a bottomless pit of how you configure it. But in the end, now this hotkey thing is actually a file called hotkey inside of, in the folders. If you can look under the hood of this thing, go to the MetaTrader file searcher guy. Everything's rewritten now, but so all those hotkeys there, and then I have a close all, open and pendings. This is my panic key here. Close all, open and pendings should be in here. It's hooked up. See, this O means close everything. So just before the news comes out, if I'm in profits, I'm just going to get out, because I'm trading the price pulse, I'm trading the squeeze that typically happens, or just the last trend that we're on going into the news. All we have to do is have the spread widen, and all of a sudden we're going to have people winning on both sides of that. So at that point, you're launching limits, maybe not on both sides of that, but you have to use some type of discretion, right? Certainly if you have a bunch of money, and every time you hit that key, I mean, this is the idea, okay? You're in a car. imagine an SUV that can handle going over mountains and pebbles. So the suspension is so deep on this SUV that it's literally like, let's say, 200 meters of suspension in a truck. But how wide would that truck be? But see, in the trading world, that dimension doesn't matter. All that matters is that you can stack your risk in a field that is has such a cushion to it, and the cushion's created by being able to place an immense amount of orders that you would never manually find the time to or the inclination. It would be such a daunting task to launch manually a high resolution, high frequency trading system, right? I mean, you'd have to have coffee. Like, here, bring me another cup of coffee. I'm gonna wait. I got that. Well, I checked that off the list. Like you'd have checked off the list. So if you create all the lists up front and then you execute that, if you're gonna do it anyways. So there's two kinds of scripts in here too. So I guess it's kind of a convoluted story, but there's the hotkey list. Then you have the actual, if you double click these. Now, when you're in common area, if you double click this thing, it's going to launch. So if I double click that right now to buy, I don't want to pull back in this Australia. That's going to buy for 15 minutes. This is the half hour, and this is 1 hour. I don't think we're slamming down there in 1 hour, but if it did, this is a retracement script that's going to buy this ball down here, and it's going to cash out as it goes screaming up, like today. So today's trade here was long before that. When the news came out, I was long. They cashed me out. People went short here. You can see here, obviously, on the line chart that, and then when it's bluish, when it's blue, you're selling, right? This is the downtrend. There's no green yet. But it doesn't mean these aren't good bounces. It doesn't mean you can't buy just because you're in a downtrend. It doesn't mean you can't buy here, scalp to here, and just be the happiest camper in the world. There's a high probability setup, the trap, the thing, and then just wackadoodle. So you need wackadoodle scripts too. And you can name the script wackadoodle, 20 pip wackadoodle. So you really have to treat it like you would a normal business. I was just down at this coffee shop, and they had a pretentious name to it even. It was amazing. I mean, it was like no end to it, right? So here, the idea is that you're going to have this key that you can, now this is just going to put buy stops, and so we're expecting a rally here. And that's my targets up there. I don't think I'll make it, but maybe one last. We still got about an hour left, so we could get one more drift up on this currency pair. The thing is, when you go to the favorites list, and this is the thing, if you go to favorites here, now you can put anything you want from the commons. You can right mouse click and add this to favorites, right? So you say add to favorites, and when that happens, if you come up here and you go to profiles, this is the template. This is what you would call a template, but they call it a profile, and this is the only way to save this configuration, where if I drop that, so here you save this profile, put a name in, right? Now when you save that profile, this is going to be in there. The hotkey settings are going to be held. It's going to hold on to all that configuration. And the thing about template, though, is that this template, for instance, if you can't just load this template without having the indicators that created that. So you need typically indicators for a template, and templates on scripts are really about, you can't have a script template, but you can have a script profile. So if you go to profiles in MetaTrader, this is giving you the overall config of everything when you load that profile. So you'll see all your settings and your charts will be one way, and but that would be the whole platform is that way, where the template will save indicators, but it just won't save any of the configuration of this common and favorites area. This is the key, and when you're on a tablet and you create a very limited amount of scripts here, say you want to drop orders like some monster bank here, which I created these 3 monster banks here that are basically at a rate of 10 pips per hour, so 20 pips deep in 2 hours. Like if that came down here, like this is like a sleeper trade, and that's how it makes money on this stuff, where the robot went short on blue, and he's short, short, short. They come down, they trap these guys. You got a monster bank here, one of these iceberg orders. Okay, you scalp to there, and maybe you've got like a psycho retrace where you scalp that, you hold through this, and maybe you're getting along on buy stops. You can counter trend trade the robot, so buy stops are stacking up here. He fills, he's making money. Okay, that's a flow. Here, buy stops on the blues, he fills, he's making money. On the larger time frame, this is a 1 hour chart. Here, robot's got sell stops in. He's counter trend trading contrarian entries. Green put sell stops in. Right, we're uptrend. When we're going down, you're buying on stops going the other way, or you've got the wherewithal to see this wick is a big deal. You bounce off, but you want to start buying from here all the way down. Just close your eyes for the next 40 pips. And so if you have this thing where you're dropping 40 pips deep in 4 hours, you're counting about 4 hours here. Now, maybe you have to have an 8-hour one, because this took 8 hours to drop. This one would have been filled. You have to picture what the point of these scripts are. So if you try to buy 40 pips deep in 4 hours, that's going to be here by here. But if you drop the order bank here, you had to drop 20 pips deep in maybe 4 hours. So trying to find the perfect fit. Okay, this is really your fitting to the, this is the low, you know. This is a 20 pip vault. This is a 40 pip vault of, you know, they're going to do that, right? How many times have they done where they trap people? Everybody's all excited. They take it away. Your sell stops are up underneath here for the big breakdowns. But you're waiting for small bars. Here's the actual range of the session is the black bar. Bounce off the round handle. Shears it off. But your buy stops here, I guess you got trapped there. But you're looking for the vapor. You're looking for the vacuum is the blue. This is the actual price. So that's your actual entry there. See, your buy stops are on these bars. The blue is just the vapor behind the vacuum, the bearish vacuum. Or they're leaving the bulls behind. Here is the sell stops on greens. There's a couple of greens there. I got the wrong color scheme here. I got to put a different background in, so I actually have different background there. But okay, so go back to the real-time chart here. So yeah, I'm trying to get this color scheme to match up. This is my new template here, so just load this, and this is going to come up now on every one. I made the entries, the ask is white, and that's the way it is on the script. All the buys are down here. So it's set up to, I just need to get a darker background to get the bullish vacuum underneath the market here to show up, like where you put your sells stops. You see it a little more clearly here. So if you're going from the short side here, it's going to look like this is the black bar. So sell stops, they trapped you. See, they're trapping the, here you didn't get trapped. Now if you're buying on the this is green, you're looking for the pullback buy on the clock, you're buying here, but your stop's here obviously, or you're slightly short maybe. Here's where you're kind of getting a break-even deal. Now here you got filled on the sells and you scalp to here, say, and now you're putting buy stops on top of blues. Now when you're green, you could put buy stops on top of small candles. But here, you can't chase that thing. If you didn't get in here, you screwed up. Here was the big hunt to here. Same thing here this morning. Another classic. All the scalpers start buying everything from this support level down on the 1 hour. They're seriously up on the day. That's the trade. You see what the trend bots think. This is all the bearishness. Everything blue is bear. I only put 2 candles on here, 2 Hakanashis on here, 2 smooth ones. But I want to play with the colors later this weekend. But I'm trying to get the I got to get the value thing out. So if I went to grayscale here, it would look more different. I also have a template I did with real candles on it. So see if I get that to come up here. Got a real candle system running today. Let's see if that's running on this thing. There's just tons of money out here to be made. It's crazy how much these markets are just all over the map. Now here's the actual MetaTrader's own. Now this is a different kind of script system here. So I posted one of these things online in this Dropbox type of thing that was free. Something called Hightailer. And I can put the link here. Now it was a sell script, but I haven't put a buy one in there. And it's kind of like, I guess you need to have a buy and a sell. So what I made here was a system where I just put a extra directory inside of the tree, so I could get just S for sell and B for buy, because if I put this on a tablet, I wanted to create more real estate in the chart, so I could see this here. And this is just 20 pips stop to make 70. These are all 8 hours. So everything here is based on an 8 hour amount of time. So in 8 hours, if we can make it to the round handle, I buy here with a stop here. Now I could also put a scalp in there. So it's like this. If you're gonna do it manually, which is the best way to go, because now you can see the outside of the like if you wanted to trade a doji, you would just, like, here was the doji entry earlier. This is a bearish doji. Here's a sell, put a hedge on right here. Here you put on a hedge. This is 2 hours of doji. Now, just before the news, I can't tell which went up down first. I think it went up first. That's the problem there. And then there's the contrarian view. Like here is the sell stop. So if you had buy stops here, they trapped you here. Unless you scalp that, you're screwed. But if you just traded this from a buy stop contrarian entry system, at least you're not getting filled on, like here, buy stops. But it's got to be a scalp. And same thing here. But look at this big payoff here. Just on that green, just on that one rule of, you have a candle like that, and you're going to put in the. So you'd have to hand place the sell stops here. They'd look like this to get picked up on that. And that's your target. But here's a 16 pip stop to get in late here. Put your sell stop there. So you get in a multiple of ways. As long as everything's biased towards the downside, the same thing here. If you're going to buy this plunge, this possible plunge to here, you can just place all these out here. Just throw them in there because it doesn't matter. It doesn't matter. You really want to be around this round number. So all your scalps look like that. Like if these are all, but yeah, just sit there until you get about 100 of those in there. You're trading 100K now. That's how you trade 100K. Because you think they're going to fill all that? And if they did, do you think it's going to ricochet around in there? Like it did here. if you had buys and sells, this is a 40 pip range of pure nonsense. Sell stops are stacking up here. Hey, you got to take 8 pips, right? You got to have 5 pip stops. So you create scalp orders. This is risk 10 to make 25. But these are all single drops. Now these cannot crash. These are a different style. This is what I posted on the this hightail some kind of thing. I guess you gotta sign in, but it's free. You gotta love that. So these scalps here would be like, okay, I'll put a 10 pip stop here. I'll sell right that fake breakout because you know they're gonna kick it back. That's always what happens at these zones. So if you go to the larger time frame, what's the chance that they come down here or they come down here? Now you can set this stuff so deep. Here's a 16 pip stop to make 25 pips. And this stuff works because you really are breaking up your risk. So here on the euro, like if you were to trade these dojis earlier, you have a whole hour to place these orders. It's pretty stupid. But say you put a buy stop right here, and you put a sell stop there. As long as your targets were at least break even, you would have made something. But you're always aware of the fact that they took this about a half pip lower here, and this whole wick window, just look at the wicks only. This is where all the limit people are making a living. They've got pennies here. They keep buying anything that goes below this last big down bar. The ups are black because hollow. It's a hollow. It's supposed to be up in the system. But anyways, I guess you can pick any colors you want. This is the colors from MetaTrader. There's buy stops on the blue. There's a blue wick there. So if you have a different thing for each thing, here it's crazy, right? This is the wicks. This is the Akinashi trailing volatility envelope. These big blues. Now you could change these colors too, and you could just get rid of one of them. But the problem is if you go too far outside, you'll have a gap. You'll have the Akinashi smooth way out here coming down. But it's got its own nice, beautiful smoothing effect there. And you know, the wicks are the battle zone. I think we all see that. That's always where the fights take place. The back alley. And anything below here almost popped in there. So and this is the round number again. Look at this. What? That's so bad. It's also the internal top here. So you don't need to look back that far. This top-down view, I just saw another Eccleston original. How to identify the trend. When you talk about a trend, that might be like saying out in your front lawn there, let's identify your lawn. Well, which segment? If you broke your lawn down to like 10 blades of grass, I'm assuming your lawn's at least 10 feet by 10 feet. I mean, 10 blades of grass, right? Okay, now let's. I mean, the idea that that's a lawn. So you're going to define a lawn as 10 blades of grass. Well, how many lawns is in your lawn is how many trends are in trend. How many trends are inside of a monthly chart, from a 5-minute to a monthly on the same data set? Well, maybe there's 50 trends. I guess you'd have to come up with like a round number. Certainly could say that inside the daily trend, there's a 1 hour inside the daily. There's probably, so that's 24 bar trend. Well, how many, to me on this system here, a trend lasts as long as the color's here. Now the trend's over. The first time there is no color, or the first time the color switches, that's the end of that trend. So let's talk about, this is an A to a B to a C. These are trends. Downtrend, uptrend, downtrend, uptrend. Inside of there's a 1-minute chart that people are writing. So this idea of trend is so fractal that it's like talking about saying I was out in my car and I was going 100, and people think you're going 100 miles an hour. I go, no, I was going 100 kilometers. They go, oh, you weren't even speeding. So this reference, everybody has an assumed description of trend, which cracks me up. So I guess I just went from script talking to market. But the thing is that if you put a 15 pip stop to make 25 pips, it's where you place this order that makes sense. So if you're a conservative confirmation biased guy, like I'm waiting for confirmation to get filled, so I'm going to put my order here. And once they start going up, well, hey, you know, I'm going up. Look at this kickback here. This is the argument against putting your orders at break even. I got in here. I put my order at break even. We're going to retest after this 60 pip launch. A 40 pip launch. So, that's the thing. At least that's the thing for me, is that I've been so upset that I did the things you're supposed to do. All the textbook trading that we all learned, we're all trying to get rid of to survive. Look at this thing come back to this. Are you kidding me? And the bodies. Think about the bodies only. Look at this entry. Just for a breakout. That was a moneymaker. Trap the early bulls. And what is this again? The last kick out. The last kickback before the big kahuna. Always going to be the premium entry. Okay? This is always it. 1 hour. Another kickback. Just trim those wicks by about 3 pips. Right? The spread on some people's platforms. And here is the lower lows, which aren't very good to see here on the. You have to hunt down the real bar there. Here's the vapor trail left by Hakanashi Smooth. Uh-oh. Accidentally double clicked. But, this is about, how much time do you want to wait to get paid? This is 10 hours of garbage, right? Is there a trade plan for these wicks? Is there a possibility to sell into that? Look at this gravestone here, just before the crazy spike up. That's what I'm asking. What's the trade plan for right now? Just want to make money today, man. Forgot this stuff. And here, of course, you're going to buy down here. So these trade plans here make sense. Like, oh, I'll buy down here at the round number. Sure, if there was news coming out, we've all seen this happen. The market makes an insane move, and it has us a buyer's regret. Look at this move here. You're 20 pips below the round number. I should go. It's a nice thing here is you go line chart. But you got to imagine the line chart here. Go up, down, up, down, up, down. So here, there's tops become bottoms here. So you can't really see it in candles, but you see the 20 pip window before the last explosion. Then you smack it around, and for God's sakes, this is short-lived. And a lot of people are like, oh, but this is totally bullish, and this is support, and here's support, and here's support, and it's like, okay, that's good for this kind of like big decisions got to be made here. With this fade into this small area, this is the death triangle of death. People that got filled here, it never looked back. Took out the low of the day, but this is a 60 pip day. This is not a 60 pip day. So just in terms of, if you block off these days, this is low volatility. Here's a doji day. Or this is just the body of trading. This here was the people that had the balls to put sells up here are up 100 pips, and they're up 200 if they held through this consolidation, distribution, accumulation. It's obviously a distribution day. Then we mark it down again, take it through the floor here. Doesn't even look back after it takes that out. Bam. Here's your only attempts to get short is the doji. So the only trades you could take in here was be when it's blue and you have a doji, you can put on a sell. Any small bodies put on sells. Here's 4 sells. Now it's dicey, right? You also have maybe the buy stops running there. Right, the buy stop strategy. Buy stop strategy. Maybe buy stop strategy when the color's up like this. It really depends what you can psychologically manage. Buy stop stacking up when you're in bullish trend mode. Take dojis maybe. Take doji entries in the green. Take doji entries in the sell. You can make a hell of a lot of money. There really is no end to the amount of money that you can make if you just traded a doji system, because you're not going to overtrade it. See, Shane? These 3 dojis here, they kicked you out of that. You were destroyed by that. So if you try to trade a breakout to the upside, so that one they're going to blow you up. This one, I guess once again, there was the 3 hours later there's a kickback. So you're looking for these 4-hour. These are mini auctions before the other move. That's what I look at it. So you have to take a lot of punishment if you're going to volatility breakout, because you're not always going to get these kind of beautiful runs here. So you need more than one strategy. I must say the hand-placed orders are always going to be better because you can already see the bodies where you need to put your buy limit. Now you can have a hotkey that drops limits behind you, above you or below you. You can have sell stops that last a certain amount of time right here. Buy stops, whichever way the wind blows. You know, you really have to pre-build in all the profits though. You need to have ratios that are 3 to 1, 4 to 1, 5 to 1. You're expecting this kind of stuff. Here it's sideways too long. This is like 9 hours of sideways. I wonder if it's going to go up. You don't have to wonder, because it might go down. These are you're never going to hear, and I don't know why these guys don't talk about it. Never going to hear about volatility. And this is 20 pips of just dead in the water, but look at all the money that the limit guys are making. They got their sell limits above last known, their buy limits below last wick. So the wick traders. Wick traders are scalpers. For me, that's the scalp. Be the wick. The trend is going to be jump on here and hold, buy and hold, sell and hold. Because the wick trader, if this was a 2-hour chart and he had limits here, he scalped that, he's out. Bam. His exit's going to be this doji. He's looking to this to get out. Because he's underwater. You know, there's a guy that bought here, and he put a stop in, say, down here. Or maybe he put a stop right there on those 2 wicks, and they stopped him out. So there's a big fight for the structures here. And once again, this is retagged in a blink of an eye. But those are your sell limits. I mean, this is a 40 pip winner. At least you could have held it to here, and you could trade it from the other way coming back. So ideally you're going to be a bipolar, bi-directional trader. Like, that's what that binary trading is supposed to be about. But they're picking the direction out of the doji. They're saying, oh, it's going up, right? Breakout here. So here you can see the big run into the euro here, coming into the, and this is still dripping, the dollar against the yen there. So this one, your sells would have been, from a rule standpoint, when you see a doji in blue, you're selling. Now here they're kicking your ass, so maybe you have a sell stop trailing coming in. You got to figure out more than one way of getting in. Or maybe you got sell limits here based on the last known body. There's a triple doji here. If you look right, it almost takes you to this 20 pip handle. Or you're just going to sell on this trap, this last hour of like, one more up. And everybody that bought here thinking that it was going to keep going, they're in pain. They want to get even, and they're happy to get out. So this should be the floor for the sell limits, which would never filled had you, as this is dropping, coming in behind here thinking you'd get picked up, you would have had to be a little bit coming in like this. So maybe you don't fill on your sell limits, but you fill on your spinning top. This is the lowest ATR of any of these candles. This one's slightly bigger, but this is 20 hours of look back. Do you need more? Look at this argument for buy limits pending at the 20 handle to make an easy 20, if not 40, for the slam back. Even if you started buying on this wick, these wicks being taken out, you're up on that trade. So you gotta look back on these charts for the volatility. And what was the play to do here? This is like a touchback in football or something, right? You don't expect them to go so far that they literally are past, and here's your triangle in volatility is just to get smaller and smaller wicks. So triangle just being this, these are more of not a triangle, but a curve. So this curve wedge, these wedge curves, and this was your trailing, say that was your trailing stop, they stopped you out there. The tighter trailing stop maybe is these blues, right? Or you're picking the actual candles. So it's all about this big 1 hour. A lot of people are just like, I'm getting the hell out. Some people maybe even had buy limits here where they just got trounced. Everybody's playing different edges on this, but your sell stops here, maybe you're trading more than one currency. Here's a higher low that just mechanically you might have got filled. Here's the attempt for the bull, so maybe got, but it's really about what you can identify something that's happening right when it's happening. That might be a different feel for oh boy, look at this thing, seen this a million times. And look at this, nearly 60 pips in 1 hour on that. Incredible. So now we're dying down, and maybe the doji hedge guys are locked in here. So somebody's up on that. Whoever bought the close of that last candle is winning right now. So you got to think what he's thinking. Where's his exit? His exit's probably going to be conservatively to here, which is this last known. It may not make it all the way to here, this doji, but people would wish that happens. But sometimes all you get is an attempt at this time of day, maybe an attempt at this level, and that's the trade. So that's the problem with trading, is that targets, people come up with glorious targets and wild ratios based on all sorts of projected speculations that they're putting their charts here. Look at this thing still tanking a pound. So look at this, was a big trap here today. They trapped all these bulls. Of course, a lot of people had sell limits up here. You can see the trap zone. You're looking for the high yesterday. And this is nothing more than about a 16 pip window, if that, of 15 pips maybe, of sell territory. And you could have just had a stop, very tight stops on scalps, and your target could have been here. You're only looking to make that. But if you held through that whole thing, you made it all the way to here. If your target was to get out here, and then maybe you're going to get back in there for this bounce, and this happened all day. And of course, anything below here you start buying on that limit style. Well, it has to be, right? The market's telling you what kind of order to place. It's not a secret. There's no secrets here in the round numbers. So if the market was going to be open for another few hours, I would just pepper this thing down here, right? without regard. You'd be like, oh yeah, 12 pips stop, just below the round handle. And your target's going to be right here where you know that's support. So you're picking your target in advance also. They maybe put a crop of orders down here. So you plant these crops, right? This is just basically putting like mines out in a minefield. This is the other round handle. You can expect a lot of activity there. A lot of, you're putting in bids at round numbers. Because you know that's where the popular prices are. It has nothing to do with Fibonacci. You could put Fibonacci. I'll tell you what, this stuff lines up on anything. Random lines line up. But I know people love that stuff. Here on New Zealand dollar, if you just looked at the dojis on this, right? All the bearish doji, or just put your orders on the wicks, right? Say you it's blue, you got small things here, you got here, right? You're making money, right? You sold off, but you're trapped. The big money's always going to be on the outliers towards back to fair value, back to center. These are going to be the unbelievable trades that you're like, I can't even believe that works, right? I mean, you could have had sell stops and rode this down, but don't you want to be the guy that buys this, sells fair value, the floor, or he buys this and he dumps it here, and he goes short up here and rides it back to fair value. At the end of the day, all you did was place orders out in no man's land, which you're not supposed to do, right? We don't know where the market's going. We'll watch it. I guess the most depressing thing I ever heard anybody say about charting is they said, or they would do a review, like the Forex review, right? So the guy says, well, okay, we're going to watch that one. Watch it? I mean, you just looked at it, you analyzed it, you must have a trade plan for what you just looked at. Like, who isn't thinking, all right, well, at least we could put some sells up here, because if they ever come up there, like I could expect at least a 12 pip ricochet off of this trap up here. I mean, isn't that the idea of looking at the chart is coming up with a trade plan? Or I'll trade a fake break out of this guy, it comes back to here, my target's here. There's one order here, I'm going to buy anything below that for a bounce to here, or to here, or to here, and just pepper the thing, right? You got to be putting orders in. You can't have inventory. You got to have inventory just like a bank. You can't just sit there and wait for these stupid setups. Euro yen, hour by hour. That's already. See, this is better here. You only see back 20 hours. Right? You don't need to know anything else, right? You're living in a little box. A box of nonsense. Look at this wick here. Did anybody have orders out here today? Like, I'm just going to buy willy-nilly like a drunken sailor every 20 pips. So you got filled on 2 tickets here. You're going to buy the round number. You're going to buy here. So you're in 3K. Or you're in whatever. If this guy got out here, right back here, with a stop, say here. So tag that, stopped you out. You bought here with exits here. You bought here with exit, but all the way down. You may not get filled. There may be orders that you have sitting 300 pips deep, and I've done that. But I have a hotkey that launches all this stuff. You write the whole script in advance. Now these single drops are going to force you to think about this is a scalp with a 12 pip stop. If you want to run multiple grids, like I'm just buying every 20 pips with a hotkey, those are different style scripts. Those could actually loop and crash. These would never crash. These are drop style. But that's in the, it really depends how you trade. All this stuff is meaningless if you don't even trade. But because if you don't some people like it's very quaint to place an order manually, and maybe that's actually psychologically the advantage they have, is that they're actually thinking about, gosh, where should I get in here? Of course, pulling the trigger at the market with a wide stop or a scalp is another way to go, but all that stuff can be when you're trading at the market, you nearly have to have a 1 minute chart or a 6 second chart. There's 10 bars per minute, because our 10-second chart, there's 6 bars per minute, because it'd be, I mean, of course, unless you just don't care, you're like, oh, I got a 300 pip stop, just buy at the market, it doesn't matter, because in relationship to where your stop's at percentage wise, it doesn't matter, right? If you have a 100 pip stop and you buy at the market on, say, a really quiet currency, sure, let it go. But you always have to ask yourself, is that a scalp or is that a swing trade? Because if it's a scalp, you're more likely to babysit it and get the fuck out, because it's about instant reward. Or not instant, but short-term trends. Now, if you just buy it because fundamentally you think the country that, whatever, those have 300 pip stops. You know, fundamental traders will be right in the end. I just saw a guy publish a thing on YouTube saying that come join my crew, because some guy called me, he was in a losing position, and I told him, just hang in there. Well, of course, if you got enough money in the account, hang in there, but the idea of getting stopped out, if that's psychologically disturbing, then yeah, just trade small and with really wide stops. That is the cure, right? So, and then you can say, look, I actually made money in the end on that trade. Well, of course. You know, you take a $30 hit on one micro lot. Hell, I could get the most conservative. If I told somebody we're going to risk $10 a month, I mean, that allows you to put in 100 pip stops. You could trade 2 positions with 50 pip stops, right? And tell the guy, the worst case scenario, we lose $10 a month. A lot of people would say, oh, I don't care. How much can you afford to lose a month is the question. Like, how much is your cable bill? How much is your cigarette bill? How much is all these bills that people pay? What is that, right? So what's the best way to go? And if you can psychologically get your brain around this, that I'm spending a cup of coffee on this trade, it's going to be a lot easier to trade, right? Who's going to fear the market going against them if it's just nothing but a painless event? I think that's the key. If there's pain involved, then you could have a problem. That's going to be always the kickoff point of pain, and that's been like that forever. Look at these sells here on the Canadian dollar. So this is a 40 pip wick off here off the round, but look at this constant smacking on the ceiling. Those are all scalp trades, right? Those are great scalp trades, aren't they? You could drill down on this a little bit. So if you're going to sell that, if I was going to sell that on the news, hopefully I got one of these keys ready. It looked like that. So that's a 1 hour scalp up there. I split this into 2 banks so that it covers, you know, but it's kind of random. This was so high, right? Now, that would have worked perfectly if you look back some of these entries here, and this is a just a 2-color Fibonacci system, but here is the where you have 2 blues. This is the 2 blue pullbacks. So if you only got in heavy on these 2 dips where you have the contrarian entry on the trend there. Otherwise, you pretty much have to keep pressing the button every hour and just keep buying like a goof. It never pulls back. But people scalped up here, and they cashed. They've been playing a little game up there. And here was the trap. Classic trap. More money than percentage-wise for one day than, you know. All this sideways action down here is very brutal, but this was very much your favorite entry is always going to be a smack back to the round, retest this low in time. We didn't even spend a few minutes there. They lock in, they're holding. You know, they got these. This is the big trap here. So also once again a double bottom retest. You could hand place these orders. Single drops, or you've got a script that drops and captures a window of 40 pips to make 50 pips, or a capture window of 15 to make 30. If you can imagine, you press a button and it just throws in buy limits like this that covers a 20 pip zone with a stop, say here. connected to all these guys, and then there's cash outs involved, and maybe it makes this much. So here's your hottest spot entry, here's your stop, here's your exit. But there's a distribution of entries here. Maybe there's a soft stop, so there's maybe it's a fixed ratio, and all you've done is shift all of these guys so they're offset by X, right? It could be like this, and then the next order gets in like this, with it stopped there. All the ratios stay the same. So it's a tree. It's like a brick wall. There's more stability in a brick wall because instead of doing a brick wall like this, which is linear, you know, the idea in the brick wall was, oh, we'll offset it so we have a brick here and then we have a brick here, so they overlap. I think that was the idea behind the brick wall stability. So you have, it's like this. Once you start stacking them linear, then it can't withstand a smash down. If this order here lasts longer than this one, and this one's the shortest, your exposure is evaporating also. So entering here, here's your stop, here's your take profit. Maybe the next one's here. So you could pre-write all that. Here's another entry with a stop. Take profits here. But you try to do what Mother Nature does, which is create a cluster. If you look at a tree, the tree's pretty much dialed it in. So you have the leaves on the top, and the root of that thing, how many times that thing branches off. So you have like a nebulous, like a nebula. Like out in space, you have these nebulas where stuff's just all squirrely. But that's going to be your catch zone for when the market plunges into that retracement bank. Otherwise, if you're trend trading it, strictly really seriously saying every time it's green, I'm going to pull the trigger, I'm going to go long, or I'm just going to hold that puppy till it really turns blue, and I'm going to sell right here at the apex of this. If you're going to do a black swan thing, you're really going to create these nebulous entries where when they take out this double bottom and they did a double trap on that you've got a trade plan for that. This is a 20 pip capture window to make 60 pips. And a couple versions of that happening. So you have a go-to button, drops at 10, 15, 20 pip deep. Constantly doing that. You know you're green. You're not getting picked up on any of your limits until here. So your limit strategy is totally not filling. You want to manually place that? I think not. So you have automated keys for that. You ride these markets. Right? This is like steering a car dashboard. Oh, car's overheating, pull over. So your car's steaming. You pull. This is the pullover. The market pulled over. It's going to take a breath. So when we go contrarian, after a big breath, people are putting buy stops in. Now they got their ass kicked here, but if they rode it out with a wide enough thing, they're like, see, here's another ass kicking though. But you know that's coming. I mean, that's 8 hours of drift. Slam. There's too much. See this vacuum forming and then caves in. And the color is a little late, but this is a 2-period moving average shift color. Anyways, I don't know if that helps, but I'm gonna try to I'll send this guy, I guess. So I'm trying to just get a concise zip file small enough. A lot of these, you got to install it inside of the MetaTrader. Copy it into open folder, MetaTrader data folder. Open that up, and you'll see in there. Just go to File, Open Data Folder. Double click on the MQL4, and you'll see scripts there. So you copy them in there, and you can actually create directories in there. So you'll see a different tree when you go to the common area. See, I made one that was just nothing but cells. So it's just nothing but. So you can do it any way you want. I have one called buy. There's one called sell. So it's nothing but sells in there. So if I put this on a favorites list, it's going to show up and be called sell. And it's kind of redundant. It's sell again. But this way, if you wanted to save font, you would just have sell and then the pip range, so you know the stop right off the bat without having to think about it. So here's the dollars going up into my sells there. So they got to spike it up there in the next hour for that to fill, for that strategy to run at the end of the day here. I can't see the very top orders there. So what's the likelihood of that? That's the question. What is the likelihood of that scenario unfolding? And you're really writing for scenarios, right? So you write a comedy script for a comedy, and you write the other script for the thing. So anyways, that's I'll put this hightail cloud thing, and I'll put a single drop for a buy and a single drop for a sell. And the way to edit the single drops is they look like this. When you go to edit them, you're going to see right on the top where it says how big a order you want to do, how tight your stop, and this is already going to adjust for the fact that you're running on a 3 or 5 decimal broker. It's automatically adjust. It's pretty spelled out. The critical thing on here is how long does it last. Down here it's going to last for 3 hours. So H3, H2, H4, H6, H8, H12, 12 hours, 1 hours. M30, 30 minutes. M15, 15 minutes. M5, it probably won't run on your broker because he doesn't want to see that 5 minute. It's like by the time you drop it, it's going to delete itself, so what's the point? Just buy at the market. But to time your entry, catch a falling knife theory and all that stuff. So I have a sell right now on that cloud thing, but I also have a, I guess I should connect a video to it. And here all I did was make this so that when I drop this, well, actually when you drop this order below the market, it's going to be a sell stop, and if you're above the market, it's automatically going to pick the sell limit for you. But I changed the description here because everything between these two shows up in your comment line inside of your platform. So under the comments, which are turned off by default, you have to turn those on. And I just chose the color red for the arrow. This script exists out there, but not in this form. It's missing the timestamp, so this is a vintage exclusive script, no longer made, out of print, as they say. But you need to have some way of organizing the entries into these markets that's not going to make you feel like you're under the gun or you're behind the 8 ball as far as keeping up with the drama of the market. It's very dramatic, very volatile. And so, yeah, that's I can think of. Certainly, it's always going to be up to personal taste. Some people want to have pepper on their food and salt, and a lot of this stuff has to do with comfort level. Of course, financially, I don't think anybody's ever comfortable with losing, but you've got to be really eager to get stopped out of these trades. That's really the only approach to like, you really want to see how robust your system can run, so you have to run it on a demo at least hard to see if it holds up to the concept. Look at this euro dollar here. So now here's a classic hammering. Look at this 3-wick hammering right at this top. So that's just, I mean, it's like over and over again. It's kind of sad. I mean, that people want to build elaborate trading systems on stuff that doesn't need it. Like, I don't even understand what a Gartley would do me at this point. Isn't it all about the fact that we've hammered into this thing? This is a 20 pip feeding zone. I know it's not a lot of pips, but look at this thing. Constantly smacking off this double top, this triple bottom. This whole inflection point at the infamous 114. Even Steven. We slope down in. The bears, they lose power. The bulls get the green ball. Here's the classic resistance, but where do they spec that to? Right there. Come back to seeing the crime. Come down again. Now, here comes the trend traders. Maybe your buy stops are stacking up here. I'm already long off of this. And if you put all these grids in, if you launch scripts that rarely get that 50% chance of getting filled, I think you're really on the cutting edge of the market, because you don't want to get filled on everything you drop, because you're probably over trading. Like this concept here. If I put in a 20 pip in 2 hours here, these are iceberg orders, right? And these are kind of goofball. Probably won't fill that, but if you can imagine that trade this morning, that was a good trade. In other words, who wants to sit around? I just placed about 30 orders in under 1 second. Who wants to sit here and babysit this crap? Look at this. 3 monster wicks into that, and look at that. So that's the trade for me. Now here come the trend traders. Drift up. Market's going to close in about 3 hours, something. I don't know. Anyways, so I don't know if that answered your question. But you asked me if you can download it, but I guess I want to just put it to this site here now. This I could send them to you. I could email them to you, but I guess I'd rather just have a link so everybody can look at the same thing. Not that everybody's asking me only once occasionally does anybody ask me anything. I guess they think I'm just such a mean person or something, but I guess I'm not mean. I'm just really pissed off. Just angry at the establishment trading community, the so-called help that people are giving. You know, Akel Stokes is threatening to take down his free material. I'm like, wow, really? Could you please? I mean, God, it's like pollution. It's like mind pollution. I don't know. These people can't. Why can't they talk about how many pips? They don't even talk about pips on that show. Like, okay, we got 21 pips stop on this with plus the spread, puts us at about X. If you had X, like, why can't you make it real for me? Okay, we're trading for a cup of coffee at Starbucks right now. Trying to make at least a latte out of a standard non-pour over brew. Man, I mean, if somebody made it real, like, picture this, and this poor girl I know, every time I see her, she's scratching a lottery ticket. I'm like, you poor thing, come here, let me show you a micro account. Like, why aren't you just trading this crap? Like, I don't know, I guess it's a lot of work. A lot of people can't even open an account. You know, they can't even make it to the broker's site, and it is a lot of work, I must say, to get your money converted so you can even trade it. Getting it, there's a fee just to deposit, withdrawal. So, yeah, it's definitely labor intensive there, but I don't call that labor. It's not like picking up rocks and building a dam out of boulders. But I guess for everybody's threshold of effort is different. But yeah, the buy drop and sell drop. So I don't know if I did a buy drop video, but the drop orders are different than these massive ones that I just clicked on. These ones I clicked on are just hardwired, and if they crash, then that locks up the platform. So you have to wait about 10 seconds for it to unlock. If you're scalping, that can seem like about 10 hours, but what are you going to do? You want more than one broker, that's for sure. More than one demo account, that's for sure. If you're really dialed into one currency, you're going to want to do some arbitrage. But I guess it's how far you want to take it. The nice thing about like a 12-hour order or an 8-hour order, 6-hour, 4-hour is that it's conceivable that a market in 1 hour could drop 50 pips and bounce 20. So those 1 hour orders, when the news is coming out, it's always fun to challenge yourself to see how much you can mentally expose yourself to. A lot of people freak out when they think that if every one of these orders filled, it would blow up the account. And of course, for some people, that's exciting, but it's really about trying to get an organized approach, because I don't think we're ever going to, well, I mean, wouldn't it be better just to press a button and launch an idea than it is to, like if you didn't have a copy machine and you just sat there and wrote handwritten books, like I'm writing a book and I'm going to actually manually write, every script is going to be uniquely different. Well, you know, when they came up with the printing press, that was a big, I think it helped all those people publish all those Bibles and stuff, and really became what a script is that if you have a concept where you have a 15 pip stop and a 30 pip take profit, you can just cookie cut that puppy, launch it out there, and just pepper the whole thing, and you don't have to hand write all these things. Now, for the manual trader, placing all those orders, wow, that's a labor of love, as they say. Not that I don't like doing real artwork with real pigments where you have to worry about moisture and all those kind of hard, real-world challenges, which keep you from atrophying, of course, right? Because you're forced to manipulate something in the real world. These platforms we're running are two-dimensional. I mean, hard to believe, right? But it's a two-dimensional world, even though at times it seems three-dimensional when you're winning and losing. But so that's really the challenge, is to mend the platform has the ability to really make and lose you tons of money very quickly, and so it's a big power wand to wield, and never before available to most traders. I mean, most people have to call their broker and worry about what he thinks of their trade. At least I did. I was very upset about having to kind of reveal to another person, this is what I'm thinking of doing, and having them. Now I'm very conscious of their tone of voice after I give them the order, because I'm thinking, well, they must think I'm just a complete idiot. And if you have that feeling going in, and it's bad enough that you feel like an idiot just to your fact that you're just spent X amount of dollars on the commissions for the order you just placed, which you're already underwater, so you got to make back the commissions. Psychologically, you are a loser out of the gate, and if your family thinks trading is like opening a pedophile ring or something, you know that's always going to work against you too psychologically. So you're really on the edge of societal norms, because really what you're doing is you're like the guy that's building, say, paper airplanes, and you're trying to come up with a new design for airplanes, and people are telling you everything's been done. But not everything's been done. I mean, now there's materials actually we can do stuff that nobody's actually. A guy came to me once and he wanted me to cast him something because I had a casting machine, even though it wasn't the same industry. He said, well, that's crossover industry. This is what they did during the war. So when people take and they say, I'm going to use this, but I'm going to use this technology, but in a different genre. So I'm using that style in a different genre. I'm going to cross over, and this is where you get the hybrids, right? So that's why they have a hybrid car now, right? Because people, oh, you know what? I want an SUV that handles good. Oh, wait a second. We have to tweak that out. So if you're going to trade, say, a trend script, maybe it buys on stops, it buys on limits, but it buys tight because it's going to get in for the explosion of a doji. Now, you could spend, well, you could spend at least an hour, or you could spend maybe a week just deciding what that's going to look like, and maybe it's going to buy $32,000, so 32 separate 1Ks in one button on your keyboard. You press it, It buys a little at the market, it buys a little on limits, it buys a little on stops, it buys in a range of 10 pips, and it's going to load up every half pip. It's going to buy 1K. There's scalps built into that. Maybe it's out of like 10K. By the time you're up 13 pips, you're already out of half the position, right? So if it backlashes on you, you're only going to lose maybe half now, right? Now, you could write that script, and you could run it on a demo. Now, it's going to be, if you're buying on stops, it's going to depend on how wide the spread is. If you're buying at the market, you have to be careful that you don't put your stop in too tight when you write that script. Maybe you have to name that script. The script only runs with you need at least a 5 pip spread to guarantee that that's going to run. Even the single drops, if you don't have a wide enough stop, the broker will not take that order. A lot of brokers now let you trade inside the spread where there is no limit for your stop. Now, a retail broker, really down the pecking order, is going to have restrict you to, say, a 5 pip stop. But there's nothing wrong with that, because they're going to force you to place more buy limits and really think about the fact that a big bar means the spread's wide. In the market, it's really nothing but a spread. They call it spread betting over in the UK, because you're really betting the spread anyways, right? You're betting the spread between, over a long period of time, the spread changes. So there's a spread within the spread, just like there's a trend within the trend. So there is the spread on your screen, but there is the fact that since it's one currency against the other, the volatility means, and it typically does, explode. Market starts to vibrate very fiercely just before the news, because a lot of people are getting out and letting go of the market, and the liquidity is crazy, creating the vibrations, the spikes, because a lot of people go flat, and a lot of people are jumping in at the same time, and everybody has a wide view of price, right? Everybody has a wide opinion of price. And so I've seen it where we take out the highs of the previous day, take out the lows of the previous day, and finish unchanged. There's a doji on, say, a Friday after we've cleaned house from the north and south. So is there a trade plan for that? Yeah. So you could actually have traded both ends towards the middle, cornered the market, or you just traded one leg spike, or you were in on the quiet part, you rode it to the explosion point, you dumped everything. There's, within one day, there must be at least 4 ways you could have traded it. I mean, 6 technically, because you could have had market orders, stops, and limits. I mean, as far as style of entry. So all that stuff could have existed. And you could just rehearse that in your mind. You can't really back test. The only problem with these scripts is you cannot whip these out and real-time back test them. But you don't have to. No sense in back testing a 10 pip stop, because it's a 10 pip stop. And so that's the trade plan. This back testing is just ridiculous. You should be able to see. If you can't see here where you would just be short on blue, what's going to matter is how many pips is the range. And here's the 40 pip battle. This is nothing but a trap of these wicks. Pull back here, trap of these guys, pull back here, finish unchanged, drift into the triangle. The same thing you saw in Australian dollar. Once it takes this out, to see this gap here, this is dropping so hard the candle can't even, the trails can't catch up. But yeah, this is my answer to the labor intensiveness, and it's bad enough that we're trading this stuff and having to worry about winning and losing than it is to pile on the fact that you're manually torturing yourself, like you're going to place manual orders, or you're going to just get in willy-nilly at the market without some type of something to slow you down, or something to spread your risk over a larger range. Because it's the outliers that make the money. It is not the In other words, the trend traders have to endure the punishment that the scalpers are making money off of their punishment. So, I mean, during that blitzkrieg, there is so much money to be made during the battle, the fight, that it's true that the fighter is going to go to another fight later on, and he's on a championship trend. So, say the fighter's winning, but you know he's trending better, he's winning more fights, but he still has to fight. So you bet on each fight, and you bias to bet on him winning the fights. So this is like the breakout, and the bigger move is expected to be in the trend. Even here, I guess you could say that this last, if everybody went bullish here, started to go green, that the majority of the move was up, even though the pullback might have stomped people. And everybody's got this idea that right here is about support. So, and now it turns blue, so this is the counter trend entry right now. Going into the end of, we got about 3 hours left here. But each day has its, so you see this Wednesday, this is Wackadoodle Wednesday, which is usually the big crazy day because people are going to go into this swap lock thing here. So that's a whole different strategy that day. And if you've got this strategy on deck for that, what you perceive is going to be this battle coming in, because after a big move, this is a micro battle. This is not much of a fight. This here, because it's Wednesday, I believe that's the cause for this effect. This is the, and I just see that kind of making new here and making new lows, making new highs. Just trying to like go after a bunch of prices. Let's fill everybody up, and it just seems like another one of those cliche moves that we see. Same thing here. If you go to the 1 hour, here it was a major spike on the 1 hour here. Wild Wednesday. Double bottom here, Wild Wednesday. But look at that. Buying here and dumping here. My lord. What a crazy day. Buying here, dumping here. Those are the scalps. This is the key. Support internally. Right at the 20. And everybody's buying here. People probably get out here. So this is the obvious scalp for the end of this session. The conservative exit here. Here is the exit back to fair value, which is like the middle of the road of this whole thing. Definitely a big, huge smash down. But after a huge smash down, it's going down, but it's rangy. It's a rangy down. A lot more money made on these bounces and these failures to break out here. There's a nice 60 pip trap. Anyways, I hope that's hope you're more confused now after watching that.